Welcome, everybody, to the Meet Damien channel. I am Damien, and today we had some good economic news come in with some economic reports that came in with the producer price index. Let's get right into it here. Okay, so this article here is coming from CNBC. Um, we have the producer price index that just came out, and that sent that information was good enough to send the Nasdaq up 2%. The Dow Jones added 400 points as it showed that inflation is tamed. Okay, inflation is looking like it's no longer an issue for us here. Let's take a look at what this article has to say. So it says that stocks rallied on Tuesday, moving closer to last month's record levels following the first two key inflation reports that are coming out this week. So today we had the producer price index that came out. Tomorrow we're going to get the consumer price index, which the Federal Reserve looks at that more closely than they do producer price index. But they're both very important reports to look at. The producer price index, okay, that showed that wholesale prices only increased 0.1% last month. Economists were expecting the rating to show a monthly gain of 0.2%. So 0.1 is even better because that means there's less inflation out there. So with that news, that's starting to encourage investors out there that tomorrow's CPI, the Consumer Price Index report, that's coming out tomorrow morning at 8:30 Eastern time on the East Coast here in the United States. That should also show that prices have increased about 0.2% month over month, or at least that's what they're expecting. And then they're expecting, maybe a 0.1% decline from the month prior to that, which would be July's CPI report. So that sent the Nasdaq up, and it sent the Dow Jones up, and it's been a good market overall for stock markets today. We can see that the Nasdaq, like I said, is up 2%, 2.4%. The Dow Jones up 1%. Also, other foreign markets were up today as well. The VIX went down. Volatility went down about 12%. The VIX is showing 18.12. So volatility is starting to come down, which means investors, long-term investors, could probably start buying the dips here, knowing that they can be confident that there's not going to be any more further dips in the near future. So with the VIX being down, that's just going to lead long-term investors to feel more confident that they can actually put more money to work in the markets. But today's video, I titled it about gold. Gold is near its all-time highs. Let's take a look at what the gold futures are doing now. Gold futures, if you can see right here, gold futures are trading at $2,507. Today it got as high as about 25.17. Okay, we did see it get higher than that. It's not an all-time high. There was an all-time high that was made on last Friday, August 2nd. We had the gold prices as high as about $2,522. Okay, so we're near all-time highs on gold, and we could see further price appreciation in gold, only because if you look at the RSI, which is this purple line here, we see that RSI levels are pretty tamed. I mean, they're slightly high, but they're not like overbought levels. Okay, overbought levels would be 70. Right now we have an RSI reading of 64.52, so we still have some room to run on the RSI. And I say that because if you look at the past here, we have seen RSI levels back in April get as high as like 82. 73, 83, 78, 81. Okay. That's those are past overbought. Overbought is considered an RSI of 70 or above. So with RSI only being about 64 today, in August 13th, 2024, we haven't even reached the overbought level, so we could still go to higher prices here on gold. Also looking at the MACD, you can see here, I'll just zoom in a little bit, but the MACD, these green and red bars here, we have some green bars here showing that we have some positive momentum, but that positive momentum is not as high as what we've seen in months prior, where we've seen even higher levels in the green. Also here in April, we've seen higher levels in the green, in March as well. So the MACD is not overheated as well. Just looking at the momentum indicators here. And what could be the catalyst to send gold to higher prices? Well, if we get some action in the Middle East, some geopolitical events between Israel and Iran, that could send the price of gold higher, because we don't know what could happen next after that. Anytime investors start to get scared about what could come next, they start to seek safety in gold and buying more gold. So that could send the price of gold higher than $2,506, which is currently trading at. So we shall see. Hopefully we don't get any bad news in the Middle East. But that could, like I said, that could be the thing that sends gold to higher prices here. Also in the markets, we see that Bitcoin has decided to make a run up again. Let's see what Bitcoin is doing here on the charts. Bitcoin is currently trading at $60,680. We've seen it made a really brutal low here back on Monday, August 5th, when we got as low as $49,000. But now we're currently trading at $60,000. So about what, a $11,000 move up in price. The thing that's concerning about Bitcoin is that we are still trading below the 200-day moving average. The simple moving average is for the 200-day is showing that Bitcoin should be $62,178, and we're right below that, about $1,500 below that. So, the longer that Bitcoin stays below that red line, it starts to give more credit, more credence to the bears out there, the Bitcoin bears, that Bitcoin might actually be in a bear market. So we need to get above that red line, because that is basically the last red line in the sand before we start going down the lower prices here on Bitcoin. And could we go down the lower prices here on Bitcoin? Well, looking at those the MACD indicator, it looks like Bitcoin is actually looking like it wants to. The trend is going up here on the red bars, where we might start getting some green bars here, and that would be a MACD crossover, and that could signify that we still have some more room to go up on price with Bitcoin. But nothing is 100% certain. The news for tomorrow or later on this week could always change. We could get a bad inflation report tomorrow that sends the markets lower. So nothing certain, but it looks like it wants to go to higher prices here for Bitcoin. Okay. And if it does go to higher prices, I expect some resistance here at the 64K level. If Bitcoin does decide to go up, because we had some sideways trading action at the 64K level in days and weeks prior in early 2024. We also have the 100-day moving average. That blue line is also showing that we could have some resistance at $64,117. So yeah, I'm expecting 64K level to be some resistance for Bitcoin if it does decide to go at higher prices here. If Bitcoin decides to go to lower prices, we could see some support at the 56K level, where we had some sideways trading action near 56K, 54, 55K. And then, of course, if Bitcoin goes lower than that, then, hopefully we can make a higher low than what we did back in on August 5th when we got as low as $49,000. If Bitcoin goes lower than $49,000, then that would signify that we probably want to go to lower prices and that Bitcoin is actually in a bear market. Because if I just do the math here real quick, if Bitcoin was to go below 20% from its all-time highs, and its all-time highs was like $73,000, then if we see Bitcoin go below 58K, that is considered a bear market, because that's 20% below $73,000. Okay, so with that being said, we don't want to see Bitcoin going lower than 58K. And if it goes down to 49K again, then that could signify that we're in a bear market for Bitcoin. Let's take a look at, since we're in crypto world, we'll take a look at Ethereum USD. Ethereum is trading at $2,707.94. Just looking at the momentum indicators here. If we look at the RSI, we can see that Ethereum is trading RSI levels of, what is this? I can't even see it. Hey, this thing, not really showing me where the numbers that I want to look at. Okay, hide. No, don't hide. All right. Anyways, RSI levels, they look pretty tamed here. Looks like we're trading at about 41 on the RSI, 42 on the RSI for Ethereum. And that's neither overbought nor oversold. It's like kind of like a middle ground, no man's territory. And we can see on the MACD that the red candles are getting smaller, and it looks like we might start making some green candles here in the MACD, which could signify that Ethereum wants to go to higher prices. And if Ethereum does go to higher prices, I would expect Ethereum to get resistance at the 2,800 level, and also resistance at the 3,000 level here. Yeah, I think 3,000 would be the psychological number in most people's heads, where they would either decide that they want to get out of Ethereum, or they might want to actually buy some Ethereum. Ethereum is currently below that 200-day moving average. 200-day moving average for Ethereum. I gotta get rid of some of these indicators here. I'm just going to get rid of this MACD indicator for now. And with the 200-day moving average indicator showing that Ethereum's 200-day moving average at $3,200, $3,231. Ethereum needs to get above that in order for us to be confident that we're back in a bull market for Ethereum. So a lot of work for Ethereum. Ethereum investors need to do some more work here to get above that 200-day moving average. But let's go ahead and take a look at another cryptocurrency here, Solana. We're just looking at some of the big three cryptocurrencies that are out there. Solana, it's a red line, 200-day moving average. That red line is showing that it should be about 148.43. And Solana is currently trading at $146. So Solana is slightly below its 200-day moving average. Slightly below its 200-day moving average. With it only being slightly below, it's actually showing the most strength out of the big three between Bitcoin, Ethereum, Solana. Solana looks like the strongest out of the top three cryptocurrencies that are out there by market cap value. And if Solana just can continue the higher prices here, we could see it get some resistance near the $160 level. And if it can get above 160, then we see some more resistance here at like 170 to 180. That's the resistance levels that I see for Solana. And if Solana decides to go to lower prices, then we would want to see Solana stay basically above the $126 level. If Solana goes below that, then we might retest the lows that we made back on August 5th when we got as low as $110. But to be honest with you, in my opinion, if Solana does go down to $110, and that could signify that we're in a bear market and that we're probably going to go to lower prices. And if we do go to lower prices below $110, then we might see $90 or even $80 Solana before we start getting some support. Yeah, because we've seen Solana get down to $78 back in January of 2024. On January 23rd, 2024, we've seen Solana get down to $78 before it bounced back up again. And it had like a hammer candle right there, signaling a price reversal for it to go to higher prices. And we did, because we never went lower than that. That was the lowest price you can get Solana during 2024 was $78. Hopefully we don't see those prices again, because us Solana investors, me being one of them, I want to see Solana go to higher prices than that. Do not want to see $80 Solana, but it could possibly happen if we can't defend the $110 level. All right. Let's see if there's anybody in the chat. All right. Nobody's in the chat right now. Okay. Well, let's take a look at the NASDAQ, because the NASDAQ was having pretty good week. I want to see. Do I want to look at the QQQs? I don't know. I'll look at the actual NASDAQ Composite Index here. All right. So NASDAQ is continuing its rally that has been making ever since last week, when it got as low as 15,708 on the index. We were able to capture the 100-day moving average, so that is looking good. If we can get a close, if we get a close at levels that we're at right now, actually we did close. It is 4:40 p.m. Eastern time on the East Coast here, so we did close above the 100-day moving average. So that's good that bulls were able to do that, because we can then probably see some continuation on this rally move, which could send us to the 50-day moving average at 17,500 before we start getting some resistance. I do see some sideways trading action here at 17,500. So I think 17,500 or 17,600 might be the next near-term resistance level for the NASDAQ. The only way I see us going down from where we are right now is if we get a bad inflation report tomorrow showing that inflation is creeping up again. Let's I want to show you guys a quick video here on inflation and what this stock market analyst thinks could happen with interest rates in September. He's saying that he thinks there should only be a 25 basis point cut in September, and I feel the same way too. But that could be off the table if we get a high inflation report tomorrow, and another jobs report that shows jobs are doing fine. Okay, but yeah, let's take a look at this. This is coming from CNBC, and we have just a market analyst giving his take on what could happen with interest rates in September.
First of all, when you were talking about the moves that we saw last week, to me, it was a lot about positioning and technicals. It was not fundamentals. Let's look at fundamentals. We had a weak payroll report, unemployment rate going to 4.3%. Now, if I were to plot unemployment rate of 4.3% on a 20-year, on a 50-year chart, it actually looks great. It is not consistent with a recession. Recession, we have seen unemployment rate going to 6%, 7%, but not in the 4 handle. So when I think about the Fed, when I think about Powell, and they meet in September and they decide whether to do 25 or 50, I do think they will cut. But from Powell's perspective, yes, we have unemployment creeping up slightly, not consistent with the recession, but at the same time, inflation is still sticky. If from a Powell's perspective, 6 months down the line, they cut by 50 basis points and inflation actually starts going up next year, and unemployment rate still remains below 5%, it will be seen as a policy error. So in my mind, I'm not in the coin toss camp. I'm firmly in the camp that it is a 25 basis points. There is absolutely no need to deliver a 50 at the September meeting.
And I think the conversation.
And I would have to agree with him. I believe that we do get the interest rates cut in September, that they should only do a 25 basis point and just do 25 basis points thereafter if they feel like they need to continue easing on interest rates. 50 basis point move could actually start sending inflation back up again. And none of us want that, because we've already taken a big hit, going to the grocery store and seeing how high food prices are, and gassing up our gas tanks. So we don't want to see higher prices. If they do cut by 50 basis points, that could send inflation up, and we don't want that. We don't want that. So steady as she goes, 25 basis points in September, maybe another 25 in November, and then December another 25, and just keep seeing what we're getting as far as inflation goes. And I think also if they did a 50 basis point cut in September, that could get investors worried, like, well, why do we need a 50 basis point? Is the economy not doing as well as we would like it to do? So yeah, I agree with this guy that 25 basis points is probably the expected move that they're going to do in September, and that's probably what they should do. If they still see that inflation is coming down, and if they see that the jobs market is holding up pretty steady, then there should be no reason to panic. There should be no reason why we have to do a 50 basis point interest rate cut. But I'm glad to see that this analyst feels the same way as I do about the interest rates, because I think 25 is enough. And I think they should start in September if inflation is going down. But we shall see. We shall see. That's why we're getting another inflation report tomorrow, and that's going to be a big day. I don't know if I'll be going live tomorrow. I may or may not, depending upon what we see in the markets. If there's a lot of action going on in the markets, then yeah, sure, I'll be here. But we'll see how that goes. If you guys like this video and like the information I'm able to share with you, please go ahead and click the like button. And if you're new to the community here, go ahead and click that subscribe button so you can stay in tune and stay in touch with the markets. And get a chance to look at some of my videos here as I try to help educate you guys about the markets and how to play the markets here. And we're just trying to build up an investment community here of like-minded individuals who want to basically save and do well in the markets, make as much money as we possibly can out here, or prevent us from losing money. But yeah, I am Damien, and this is the Meet Damien channel, and I appreciate you guys coming out to look at these markets with me. Be on the lookout for some of my YouTube shorts. I'll be doing some more YouTube shorts throughout the week, and I might sprinkle in a little video here or there about crypto, and be on the lookout for my next live stream here. I felt like going live today because we had the PPI report come out, and then we've seen gold come out to some near its all-time highs, and Bitcoin was also showing some recovery. So overall, it was a good day in the markets, and I just wanted to be able to share that news with you guys today. So be on the lookout for my next live stream here, and and yeah, be on also take a look at some of my YouTube shorts when I come out with them. Okay. All right, guys. Hope you have a good rest of your Tuesdays and a good rest of your week. Take care.